Good morning everyone, welcome to the official tip channel of Officer Survey 24/7. As you all know, we have a 50 days 50 classes series in which we are discussing every day the one single topic of your Indian economy, Indian financial system at 7:30 AM only on Officer Survey 24/7. The same we are doing in the same channel at 7 AM for PPB, Principles and Practices of Banking. So do remember, Monday to Friday you have to join the session at 7 AM and 7:30 AM for PPB and IFS respectively. On Saturday you will find the weekly revision session, and on Sunday you will find the special session. So do not forget to join these session only on Office Survey 24/7. And if you want to join the session, do subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. Okay, so let's start the session. In this particular session we are going to discuss IFS particular module B chapter. So as you know, 45 units are there in module in overall your Indian economy, Indian financial system. Out of that, if I talk about 11 units were there in the module A, till 19 we have module B. So today we are going to cover the 19th unit. It means today we will be ending the unit 19. It means module B of your IFS. Okay, so before starting to the chapter, first of all, I am your mentor Amanjot Kaur for Indian economy, Indian financial system as well as for PPB. And now I want to let you know first that what actually the union budget is. As you can see, the 19th unit is about your union budget. So what actually the union budget is, let's discuss that first and then we will discuss the questions. Okay, so the union budget, if I talk about, is also you can call that fiscal policy. So the fiscal policy every year presented with the union budget of Government of India. Okay, so first of all, union budget earlier what used to happen, first of all, it is prepared by Ministry of Finance, it is presented by Finance Minister, it is presented on 1st Feb, that is the first working day of Feb or the 1st Feb, then at 11 AM it will be presented. This is the basics of your budget. Now how this has been started, earlier we used to have what? In India there was the general budget that used introduced by Britishers. So Britishers introduced the general budget in India in 1869. So the first budget of India was introduced in the year 1869. Then this general budget was divided into two parts. The first part was rail budget that used to presented by the Ministry of Railway Minister, and the second budget was union budget that used to presented by the Finance Minister, or it used to prepared by the Ministry of Finance. Then what happened? Then again in 2017-18 it is converted into general budget. Okay, so from 2017-18 we again have merged the budget and we are presenting general budget only. And since then this general budget prepared by Ministry of Finance, presented by Finance Minister, presented on 1st February and presented at 11 AM. One day before of this budget day we present the economic survey. Economic survey is simply the survey of the economy which let you know that what is the position of your economy, that is known as economic survey, right? So here we are talking about economic survey. It is presented one day before union budget. Okay, now I have discussed what is union budget, when it will be prepared, certain points I have given to you. Now one more important thing, in our constitution they haven't used the word budget. In the article 112 they have used the term that is annual financial statement. They have introduced the term annual financial statement. So the annual financial statement is defined under our constitution in the article 112. It is the budget have not been defined in any particular term, that is the budget was also talked as the annual financial statement. Okay, and what this annual financial statement actually is, this annual financial statement is the statement of income and expenditure of Government of India. It is the income and expenditure of Government of India. And also remember, whenever Government of India presents the budget, it always gives you the estimate budget. It always gives you what? Estimate budget. Because whenever government is presenting budget, that budget will be presented for the upcoming financial year, not for the current financial year. You are estimating for the upcoming financial year. That is your budget, है ना? That's the estimated budget. Estimated budget. And in the end of the financial year, you do what? You revise this budget just to check whatever planning you have done, it was success or not. So in the end of the financial year, we do what? We revise the budget. Okay. Now apart from that, if we talk about budget, the sources of income for Government of India are of almost 4 types. First, government earn money from tax. Government earn money from non-tax services. Tax means direct tax, indirect tax, both will be covered. In non-tax, government will cover your taxes, not taxes, fine, penalty, challan, etc. will be covered in the non-tax. Then we have a debt receipts. It means the government have given a loan to someone, to some country, and government is charging interest on that. Then we have non-debt receipts. Now non-debt receipts simply means what? It simply means you are taking back, you are doing investment. On investment, you are taking back the profits. That's the non-debt receipts. These are the sources of income for Government of India, and the expenditure for Government of India are of 2 parts, or they have divided into 2 parts. That is scheme expenditure and non-scheme expenditure. So there are certain expenditures in the country which are already planned. We have to establish schools or hospitals, dams or something else, let's say. So this is already planned. We have to give LPG connection to 1 crore BPL family in the country. This is already planned. So this is the scheme expenditure. Non-scheme expenditure which can happen suddenly, like the uncertain situation, natural calamities, etc. So that will be the part of your expenditure. Okay, so this is what the budget is. I have given you the overview. Now let's start with the questions and discuss in the form of question with the explanation. But in the end of the session, I will be asking you all how many answers you have given correct. So be very precise about your answers so that you will let me know in the end of the session how many answers you have given correct. Now fiscal deficit refers to dash. What does fiscal deficit refers to? So if I talk about deficit, deficit means loss. When the expenditure of Government of India is more than the income, this is known as deficit. So we have certain options here. The first we have the difference between government's total expenditure and its total receipts, including borrowing. Second, the difference between government's total expenditure is total receipts, excluding borrowing. Third, the difference between government's tax collection and salary payment. The difference between government's tax collection and government's borrowing. So what do you think, which of the following is the fiscal deficit? Which of the following is the fiscal deficit? Let me know which of the following is correct. A, B, C or D. Okay, so the deficit means loss, and whenever the loss happens, the expenditure of Government of India will be more than the income. That's the loss. Hana, that's the deficit. So fiscal deficit happens after the budget has been gone to the loss, when the budgetary deficit is there. What is budgetary deficit? The overall budget of the Government of India is in the loss. The overall budget means the expenditure is more than the income. That is known as your budgetary deficit. Okay, so here when we talk about fiscal deficit, it will be the difference between government's total expenditure and total receipts, and that you have to exclude the borrowing. So whatever loss happened, the total expenditure was more than the total revenue. After that, government has borrowed the money, so that will create your fiscal deficit. The right answer will be B option. Right answer is what? B option. This is fiscal deficit. Now there are 5 types of deficit in the budget. Okay, now which of the following is the definition of budget deficit, or you can call it a budgetary deficit. Budgetary deficit or budget deficit, both are same. So you have these options. First, excess total expenditure over total receipts minus interest payments and borrowings. when your total expenditure is more than your total receipts and you are subtracting the payments and borrowing. Second, excess of total expenditure over the total receipts minus borrowing, okay. Excess of revenue expenditure over the revenue receipts, okay. Excess of total expenditure over the total receipts. So what you're talking about, budget deficit, it means the overall budget of the government went to the loss. And when the overall budget went to the loss, it means total expenditure is more than the total income. So right answer will be D option. The excess of the total expenditure over the total receipts will be the right answer. So right answer is D. Okay. Next, revenue deficit is calculated as. Revenue deficit is calculated as. So I will tell you, you can answer here. I will give you the understanding of revenue deficit means what. Actually, budget have its two components. The first one is revenue budget. The revenue budget is the short-term budget of the government of India, which talks about daily income and expenditure. Then we have second component, capital budget. Capital budget is a long-term budget which talks about the long-term income expenditure of government of India. Now revenue receipts, revenue budget covers your revenue receipts. It means the income that government of India is earning on the day-to-day basis, and the revenue expenditure, that means simply your expenditure that government of India is doing on the day-to-day basis, like the salaries or payment, whatever. Now similarly, the capital budget will have capital receipts and the capital expenditure. So when the overall budget went to the loss, when the overall budget went to the loss, you can say revenue expenditure plus capital expenditure minus revenue receipts plus capital receipts. It means both the expenditures in revenue and capital are more than the revenue of, income of revenue and capital. So it is what, whenever you calculate the overall budget expenditure or income, you have to cover revenue and capital budget. Right, this is what I'm trying to say. If I'm calculating the overall expenditure of the government of India, I will calculate capital expenditure plus revenue expenditure. I want to calculate the overall income of government of India, I will write like revenue receipts plus capital receipts, because budget have these two components. Now what will be revenue deficit? The question is asking about revenue deficit. So when this revenue expenditure is more than revenue receipt, that's the revenue deficit. So right answer will be your C option. Okay, right answer will be your C option. Clear? Next. Net tax revenue. So tax revenue is simply the earning that government of India does with the taxes. There are two types of taxes, direct and indirect. Why we call direct tax as a direct, or why we call indirect tax as an indirect tax? Because direct taxes are those taxes whose burden cannot be shifted. Let's say, for example, I am the customer, I am the public. So I have a liability to pay the taxes to the government, because government is providing me all the services I am using in the country. I am using road, I am using metro, I am using let's say public transport, whatever I am using, that is here because of the government. So I have a certain liability towards government. I have to pay that amount to the government in the form of taxes. And the taxes are of two types, direct and indirect. So direct tax is what? It's a type of tax in which you will find, what can I say? You cannot shift your liability on the third party. Let's say I'm earning a certain amount of money. I'm having my own income. So the company is deducting TDS, that is tax deducted at source, every month from my salary, and that other 24/7 pays that to the government of India. Now I am saying to the company, do not cut my taxes from my salary, give me my whole salary. My taxes will be paid by my brother. Can I say that? No. Because direct tax is the liability of you, the person who is earning the money. You cannot shift your liability, you cannot shift your burden on the another party. So direct taxes are those taxes whose burden cannot be shifted on the third party. But the indirect taxes, burden can be shifted on the third party, like in the GST. Okay. So which of the following is correct in case of net tax revenue? Tax revenue we are calculating here. So whatever the gross tax revenue was minus national calamity contingent duty transfer to NCCF minus state share. So this is the right option. The first option is correct here. Q, because the gross tax, whatever the gross tax revenue was there, out of that you have deducted the value which you have to pay because of the national calamity. You also have deducted the value that the share you have to send to the state government. So after deducting all the expenditure that you have done out of your gross income from the taxes, that will be your net tax revenue. Here you are adding the tax share. Why you will add the tax here? You are paying taxes to the state government. You are not taking taxes from the tax here. You are paying taxes to the state government. You are not taking taxes from the government, state governments. That's why this won't be right. Here you are adding the expenditure of national calamity. How you can add? This is your expenditure. This is your not income. Tax revenue is the income of the government. This is your expenditure. It cannot be right. The fourth one, again, it is adding the national calamity expenditure. That's why the right answer will be A option. Okay, right answer is A. Next question. Net fiscal deficit is the difference between. Now, fiscal deficit we have seen after the budget went to the loss, whatever the borrowing of the government, that will be known as fiscal deficit. So, it is the difference between what? Gross fiscal deficit minus net interest payment. Gross fiscal deficit and interest payment, gross fiscal deficit and net lending, none of the above. So it's very obvious, net lending remained, you have taken the remain lending you are and talking about gross fiscal deficit. So when you subtract the net lending from the gross fiscal deficit, you will get the net value of fiscal deficit. Because we have discussed now, fiscal deficit is what? Total expenditure of government minus total income of the government excluding borrowing. So you have excluded the borrowings here. And that's why it's a difference. Clear? So right answer will be C option. Right answer is C option. Next. Total receipts in the central government budget. Receipts means the income of the government. So from where the government of India is earning income, that you have to tell here. The total receipts of the central government. So we have these four options. First, revenue receipts plus capital receipts plus fiscal deficit. It can't be true. Revenue receipts, capital receipts plus drawdown. It can be true. It can be true because you have revenue receipts, capital receipts. Revenue, capital, again deficit. Deficit is not your receipt. Total receipts means we are finding out the income of the government of India. Deficit is not an income of the government. That's why first and third will be wrong. And also the fourth one will be also wrong because it is including deficit. So the total earning of the government is revenue receipts plus the capital receipt plus the drawdown of cash balance. Whatever cash balance was there, that is also the income of government of India, right? That's why it is the right option. So right option will be your B option. Clear? Next question. Net fiscal deficit is calculated as. So that's what we have discussed till now in this particular session only. So which of the following is the correct calculation? The formula it is asking. Gross fiscal deficit plus net lending, you can't plus, you have to calculate net value. Net means remained value you have to calculate. So gross minus net lending, is it true? Yes, it is true. We have just discussed in the form of difference. The difference between the two is known as net fiscal deficit. So simply gross fiscal deficit minus net lending will be the right option. Okay, right answer will be B. Now, expand NCCD. Which of the following is the full form of NCCD? 1 second. Okay, this is the NCCD. First is saying National Council on Crime and Delinquency, National Council on Credit and Debentures, National Council on Commercial and Deregulation. No. The right answer is National Council on Crime and Delinquency. So right answer will be your A option. So a 0.5 mark question can be asked in the paper. I will tell you 0.5, 1 and 2. This is the distribution of your mark. In 0.5 you will find what? In 0.5 questions, you will find like one-liner questions. You will find, let's say, for example, abbreviations. Okay, abbreviations full form can be asked. You can find like the questions of your true false type can be asked. One-liner true or false statement was. One-liner you can find fill in the blank. In 2-marker question, you will find case study questions can be there. Statement based question can be there. Okay, so these are the pattern of question you can see that will be available in your paper. So accordingly the abbreviations will be also important. Whatever abbreviation you find out, do make sure you read that. So here the question is asking pick odd one out. The different one out of these 4 options. Out of these 4 options, which of the following is a different one that you have to tell? The loans to public enterprises, pension, subsidiaries, police. So you can see in the budget we talk about loan given to the public enterprises, pension, that is the expenditure of government, subsidies also the financial assistance government is providing to the social welfare of the country. Police is not a part of like a budget or union budget of the country, so the right answer will be D. This is the odd one out. This is what? This is the odd one out. Next question, again the pick the odd one out. Achha, the pick odd one out will be also your 0.5 mark question. This pattern of question can be seen in the 0.5 mark question. Okay. So now these are the 4 options you have. First, custom, service, interest or income. Which of the following is your odd one out? See, all are the form of income. Custom duty, government's income. Service tax, government's income. Income tax, government's income. Interest receipts is also a government's income, but the difference is it's a non-tax revenue. It's what? It's a non-tax revenue, and the A, B and D all are what? They are tax revenue. So the right answer will be here your C option, because it's the only option that is the income of government but from the source non-tax revenue. So that's why C option will be there. Okay, pick odd one out will be C option. Now this is how we discuss the union budget, the 19th unit of your Indian economy, Indian financial system, module B. So as you can know that we have total 19 units in the module B we have completed. So module A and B covered. From the next class we will be covering the module C, a very important module. C and D module have more weightage in the paper in comparison to A and B. So do very precise about it. Be careful while you are studying, because conceptual clarity is very important, not in only C and D but also in the A and B. So do make sure you revise it properly. Okay, and before that let me know how many questions you have answered correct. Also, if you are watching recording session, do make sure after completing the recording you drop a message in the comment section and let me know how many answers you have given correct. Okay, so now if you want a complete discussion of the union budget, because in the union budget a lot of things are there that you have to cover, I will tell you here. First of all, you have to understand the basics of the union budget, like the definitions and all. You have to cover that. Then you have to cover the types of budget. There are 2 types of budget, that is balanced budget and unbalanced budget. The unbalanced budget further divided into 2 categories, surplus and deficit. Then you have to study the components of budget. The components of budget are 2 that I have told you, revenue budget and a capital budget. Then you have to cover types of deficit and effective revenue deficit, fiscal deficit and primary deficit. These 5 types of deficits are there. Then you have to cover the certain terms related to the budget, like what is a finance bill, vote on account, money bill, etc. What is annual financial statement. Then a certain budget allocation you have to cover. Budget allocation, because budget is presented every year by the government of India. Every year government presents the budget. In that situation, budget allocation is also important. So these all you have to cover. And to cover all these, you can go to the Mahapack 2.0. But to go to the Mahapack 2.0, you have to download the Adda 24/7 application. So first, download the application. One more benefit is there, because of the application, you will find here the discount of how much? Additional 1%. Additional 1% discount will be available for all of you if you go with the application. So do download the application first, then go to the Adda 24/7 application. When you go to the application, you will find a front page where JAIIB CIB section will be different. You will find the JAIIB CIB section. Click on the section, then go to the JAIIB October 2023, and simply you can find there is an offer going on in Mahapack 2.0, that is double validity plus 81% discount. So batches are also available if you want to enroll in a particular batch. Otherwise, you can go with the Mahapack 2.0. First, check the offerings of the product. So these are the offerings of the product. You will find here the live classes, e-books, test series, video recordings, etc. Test series will be topic wise as well as full length, mini marathon, maha marathon, everything will be available here for all of you, right? Everything will be available. And after that, you will find the validity here. You can see 6 plus 6, 12 plus 12 and 3 months. So now there are so many bankers who says, why I would purchase 12 months validity, why I would need 2 years validity, because I will be clearing the paper in the October 2023 only. If you have this kind of target in your mind, that's why we have introduced the 3 months validity Mahapack also. So you can enroll accordingly whatever duration you want, and after that just use the code that is right now Moon80. After using the code Moon80, you will get 80% discount. But if you want 1% additional discount, use the coins that is available on your application and you will find minus 1% discount on this amount. It means 1% more discount will be available. So this is how you can enroll in the Maha Pack. You can enroll in the your individual batch also. But do make sure you select the validity from here, 6 plus 6, 12 plus 12, 3 plus 1, because accordingly price will differ. Okay, and if you find any kind of doubt or any kind of issue at the time of enrollment, like code is not working or something else, you can contact on this number also. You will get the query resolved here. Okay, so this is all for enrollment process. And as I have told you, today we have completed modules B. From tomorrow we will be starting the module C. And tomorrow at what time? Every day, Monday to Friday, we meet at 7 a.m. for PPB, at 7:30 a.m. for Indian economy, Indian financial system. On Saturday, you will have weekly revision sessions of 7, so that all the upcoming sessions, you will know that these are the session that is going to come in a particular day. And if you want to be notified about the session, just click on the bell icon also, so that